Look, we've entered the ETF era of crypto. It's much harder to go from 0 to 1 than it is to go from 1 to 100 in anything, but also in ETFs. It's going to take regulatory changes, maybe changes in the direction of how the SEC thinks about this market. But there are a number of robust assets that deserve ETPs, in my view. In Europe, you see these ETPs helping investors get safe, low-cost exposure to these assets. I think we're going to get there in the US. So, yeah, stack up the pillows behind your right shoulder. We're working on them. We think the crypto market is entering another major bull market period. I know it doesn't feel like that right now. We're all, sad about September. We've been chopping sideways since March. People are worried about the political outcome. But from our point of view, the sort of 4-year cycle is still intact. There's a lot to be excited about in crypto. Now is the time, to stake your position and grow aggressively.
The future of cryptocurrency regulation is one of the most important problems that the markets are currently facing. Due to the SEC's enforcement of stricter regulations on digital assets, investors have been dealing with uncertainties about the regulatory environment for the most of the year. The markets will ultimately gain from clarity, whether it is positive or negative, according to prominent voice in the crypto field, Matt Hougan. While many speculate about which laws would surface and how they might impede innovation, Hougan thinks that a clear framework is essential to the expansion of the market. Market stability is essential, much like the monetary policy of the Federal Reserve. Institutional investors may feel more comfortable entering the market if they are aware of what rules to expect in the future. This is especially important for cryptocurrencies, which thrive in environments where risks are recognized and controlled. For more enlightening videos like this, kindly like this one, subscribe to the channel, and enable post notifications. Remember to leave your ideas in the comments section below. Your actions help the channel and support its expansion. Let's get back and hear what Matt Hougan has to say.
From my perspective, the thing that markets hate more than anything else is uncertainty. And we've been dealing around huge uncertainty around the direction and timing of Fed rate cuts. I know we're all now in this 25 or 50 basis point camp and rate cuts are a fait accompli, but it wasn't that long ago that we were wondering when Powell and company would decide it's time to move into rate cuts. And it wasn't that long ago that Fed governors were speculating on rates going up another 25 basis points. So the resolution of uncertainty around rate cuts and the scope of those rate cuts, and then the resolution of uncertainty around the election. Again, I know people are worried, Trump, Harris, what will it mean, etc. But from my perspective, actually, resolution of uncertainty is the most important factor. So we think those things are going to coalesce. You also have rising global liquidity from central banks. That has started to change. I think we're set up for a very strong Q4, particularly as we get toward the November election and beyond. We think the crypto market is entering another major bull market period. I know it doesn't feel like that right now. We're all, sad about September. We've been chopping sideways since March. People are worried about the political outcome. But from our point of view, the sort of 4-year cycle is still intact. There's a lot to be excited about in crypto. Now is the time, to stake your position and grow aggressively. And that's what you're seeing from Bitwise in those acquisitions. It's also what you're seeing in our sort of distribution strategies on our core products. And we're really excited for the next, couple years and what it will mean for Bitwise and for the industry. They were trying to say there isn't institutional adoption of these ETFs because mostly these ETFs are owned by retail investors. The point I was making was even if you excluded all the retail money that came in and just looked at the institutional money, they would be the most successful ETFs of all time by a huge factor. So, it is true that retail investors are buying Bitcoin ETFs. That's great. This is one of the best, cheapest ways to get exposure to Bitcoin that exists. It's very familiar, particularly to older generations who are more used to brokerage accounts than they are to wallets or apps. Great, but that doesn't mean that institutions aren't buying them as well. I come from an ETF background. The thing I love about ETFs is that little old me can own the same exact product as the Harvard Endowment. And we can both own it for our own reasons, getting the same deal. That's all that's happening here. My, father is buying the ETF and the state of Wisconsin is buying the ETF.
Right.
And that's the rising tide. And I think flows are going to re-accelerate in Q4. And I think flows in 2025 will be higher than 2024. I would rather the ETF for ETH launched later. I think it would have been more successful if it launched in 2025, just because the investors we talk to, who are professional investors, are still getting their hands around Bitcoin. I know that sounds goofy to people on this podcast, right? Because the idea that you're still getting your hands around Bitcoin, but that's where most people are. They're going 0 to 1. And then to complicate the story and talk to them about, Turing complete blockchains and applications built on blockchain, it's just a lot. So these ETFs have actually been pretty successful from my perspective. We have a couple $100 million in our ETF. That's a top, 2 or 3% ETF launch. That's pretty good. We'll take it. But I think they will build over time. I also think more than Bitcoin, Ethereum is wrestling with this election uncertainty. Bitcoin has kind of gotten through the regulatory hurdle. There's not much that regulators can do to harm Bitcoin. There's still uncertainty on ETH. Remember, the SEC and the CFTC have different views. DeFi and other ecosystems built around Ethereum have a great deal of regulatory exposure. So I think I'd be surprised to see ETH rally until we get sort of to the election or beyond and we see what the Harris campaign positions itself on crypto. I just think there's more uncertainty in that market. My view on those tokenized products, really exciting, is that those are serving a crypto native industry. Those are serving people who are actually crypto native but need fund exposure. Like they're serving hedge funds who want to monetize their cash over the weekend. They're serving other crypto traders that are crypto native. So I actually think the demand for these tokenized products for the next 2 years plus is going to come from crypto and not from traditional investors. And I think that's great. So I'm very bullish on that space. I'll have to think about whether it makes sense to package those in ETFs. But I do think there's going to be a convergence between these tokenized real world asset products and the traditional markets. I think the demand is coming from crypto, not from the traditional markets, and therefore it's fine to be in a crypto native package.
Dealing with the ambiguous regulatory environment has been one of the major issues facing the U.S. cryptocurrency business. Despite the fact that the SEC has turned down numerous applications for Bitcoin ETFs, Matt Hougan is upbeat. He draws a parallel between this and the protracted struggle for the approval of Bitcoin ETFs. Hougan explains that Bitwise, his company, takes a data-driven approach in their submissions to the SEC. They're working hard to show that the crypto markets are safe from manipulation. He also points out that Europe is far ahead in terms of regulatory clarity. European regulators provide clear guidelines on which crypto assets can be listed as exchange-traded products, ETPs, and are more open to working with the industry. This level of transparency is a relief for companies like Bitwise, and Hougan hopes the US market will soon follow suit. Could you please support our channel by hitting the like button? Now, let's listen to his following words.
Analyzing what the SEC has said, they sort of summarily rejected the first 2 applications. That doesn't mean the door is closed. Remember, Bitcoin ETFs were rejected for 10 years, and it was worth the wait. So we are doing a lot of work on the underlying markets around protections against market manipulation and how to demonstrate that through data. Bitwise has always led with data in its SEC filings. We've always, for better or worse, submitted like 200, 300 pages of data with every filing that we make. We're very excited about the Solana ecosystem. We think it's robust. So we're doing the work on that and on certain other assets. The timing of when we're filing them, it just depends on how fast we get through that work and what we find. Look, we've entered the ETF era of crypto. It's much harder to go from 0 to 1 than it is to go from 1 to 100 in anything, but also in ETFs. It's going to take regulatory changes, maybe changes in the direction of how the SEC thinks about this market. But there are a number of robust assets that deserve ETPs, in my view. In Europe, you see these ETPs helping investors get safe, low-cost exposure to these assets. I think we're going to get there in the US. So, stack up the pillows behind your right shoulder. We're working on them. It's such a relief. It's unbelievable to go from this hazy US regulatory market into Europe, where there are clearly things you can do and clearly things that you cannot do, right? There are certain crypto assets that you can't list ETPs on, but there are a wide variety that you can. And just knowing that that's possible and knowing that the regulators will work with you is a tremendous relief. So whether that's in Switzerland, which is a booming crypto market, or the EU, where ETC Group has sort of pioneered access through Xetra in Germany, it is really wonderful to operate with a little bit more regulatory clarity. I hope it's a taste of what's coming here in the US. And if it is, I can tell you that it tastes pretty good.
For sure. Now, the other acquisition was Osprey's Bitcoin fund, right? Tell us about that.
Yeah, absolutely. So Osprey had a private Bitcoin fund, OBTC, and we're in the process of bringing that into our Bitcoin ETF. Assuming it's successful, it will be, it would be just a win-win. I think it should lower costs. It should provide continuity.
Despite the SEC's initial rejection of Bitcoin ETF documents, Matt Hougan stressed that this does not mean that the door is closed forever. He said it was worth the wait, drawing a comparison to the 10-year rejection of Bitcoin ETFs before they were eventually approved. His company, Bitwise, is dedicated to supplying the SEC with comprehensive, data-driven submissions. These frequently consist of 200 to 300 pages of data, illustrating safeguards against market manipulation. Although Hougan is particularly enthusiastic about and confident in the Solana ecosystem, Bitwise's submissions for assets such as Solana will be made at a later date based on their further research and discoveries. While obtaining the first ETF, or moving from 0 to 1, is far more difficult than going from 1 to 100. He clarified that there are a number of strong cryptocurrency assets that the US could consider ETF status for. In conclusion, you can summarize Hougan's optimism and the progress being made in both the US and Europe, reinforce the message that regulatory clarity is crucial for crypto markets to thrive. And while the US is catching up, Europe's regulatory framework provides a blueprint for what the future could hold. Encourage the viewers to stay tuned for more updates on how regulatory changes, both in the US and globally, will shape the future of cryptocurrency investments. Until next time, don't forget to like, subscribe for more videos like this.